Folks, we are recording the daily financial news outside this morning. It is kind of dreary and actually has started raining, so we will make this quick. First thing I want to do is give a special shout out to Cody Sanchez. Cody Sanchez, if you don't follow Cody, is an amazing content creator. She is putting out a theme called Build Your Own Baby Berkshire Hathaway. If you don't know Berkshire Hathaway, that is essentially Warren Buffett's umbrella company. And I love that message. Essentially what Cody is telling people to do is this is the time. Yes, we are in a scary environment. Yes, 2023. Yes, 2024 will be a rough year. Where have you heard that before? But what you need to do in this environment is go get it. Learn to buy businesses, small businesses, get seller financing, get terms. You can buy small businesses with zero down. What I'm most impressed with Cody Sanchez's message is, folks, generational wealth is built in times like this. That is a message that I've tried to deliver over and over again. And I want to be clear. You do you. If your thing is stocks, if your thing is crypto, if your thing is small businesses like Cody, or if your thing is real estate like one rental at a time, do your thing. This is a time to focus on your area. Do the work, skill up, write great offers. This is where the opportunities are. All of you have been saying, I wish I bought in 2010. This is the time. And if your thing is small businesses, definitely follow Cody Sanchez. She is doing it the right way, delivering a positive message with real world advice. So I greatly appreciate that. Let's talk about next week. We have a lot of economic data coming out that is critical for this channel. On Tuesday, we get existing home sales. Remember, existing home sales bottomed last month at 4 million. Expectations for this month are 4.2 million. I am actually going to take the over. I am going to take existing home sales at 4.35 million. I think we're going to see a uptick in February because rates were coming down in January. So we shall see. Some of that might bleed over into March. But yes, I'm going to take the over on existing home sales. If you want to guess, go ahead and leave a number below. Let me know what you think existing home sales will be. Again, last month, 4 million. Expectations, 4.2. I am taking 4.35 million. Wednesday, of course, we get the Fed rate decision. I believe the only answer is a 25 basis point move. I think a 50 is wrong. I think 0 is wrong. I think both 50 and 0 send the wrong message to the market. But we shall see. What is more important, even than the rate increase to me, is the dot plot in the message. First, the message. Will the message be, we are prepared to do more? Will the message be, we are data dependent? Will the message be, we are going to pause? Something to know that after this meeting, the next Federal Open Market Committee meeting is not until May. So we have a lot more data coming. So it'll be very interesting what happens next. And then finally, this is one of the times where they release the dot plot, basically the forward indicators where the 19 Fed presidents are thinking. This will be very interesting. Where is GDP? Where is unemployment? Where is the terminal rate? Where are rate cuts? All very, very important things. Wednesday is going to be chock full of important data. Thursday, we get new home sales. New home sales are where I think I am different than a lot of real estate channels. I believe new home builders are actually going to shock to the upside. So the numbers, last month, expectations, 648K. Last month was 670. So most people are forecasting down. Again, last month, 670, expectations, 648. I am going to guess 700. Yes, folks, I believe new home builders are going to gain market share, do more transactions in this environment. Why? There's no listings, and new home builders can adjust price and payment. Yes, folks, financial engineering, rate buy downs, whatever you want to call it, they have the ability to adjust a buyer's payment by adjusting the mortgage rate and taking some of the purchase and buying down the buyer's rate. It makes perfect sense. Again, people buy on payment. So again, I expect that to go up. And of course, on Thursday, we also get jobless claims. 2 weeks ago, we were at 212. Last week, I think it was 192. Expectations this week are 199. This is something we have to watch. The job market is strong. Again, as I've said before, I think Jerome Powell needs this number to go over 300,000 to feel like he is winning. Let's talk about the liquidity crisis. Again, I talked about this yesterday. I think it is a real thing. I think some people may have misinterpreted a couple of things. One, I believe the liquidity crisis is happening now. I believe businesses, commercial real estate investors don't feel real pain till Q4 of 2023 through Q3 of 2024. We will see bankruptcies. We will see properties going back to the bank, but it doesn't happen quickly. The liquidity is drying up right now, but you and I won't see the impact until Q4 of this year through Q3 of next year. How will you see it? Well, companies will be trying to raise debt. They will be trying to sell shares. Think First Republic Bank. They tried to raise debt. They can't. They're going to sell shares. They're going to dilute. Some companies will successfully do that. Many will not. What they're going to do is they're going to have private companies. Private companies like Stripe are going to have down rounds, right? I believe, this is only from memory, I believe Stripe's last round was at 95 billion. The one they just completed was at 50 billion. That is roughly a 50% haircut. Down rounds are coming. You are going to see commercial refis. We are going to see limited partner equity raises. We are going to see forced sales. But this will all come, again, Q4 of this year through Q3 of next year. And yes, folks, this will cause job losses. This will cause bankruptcies. It will cause folks to lower the operational spend. Now let's talk about real estate. There's a video coming out today with Jason Pritchard where I talk about what's going on in the real estate market. I talked the real estate market yesterday in the Daily Financial News. Some people took that as housing market. I want to be very clear because I invest in all kinds of real estate. When I talk real estate market, that is the entire bucket. When I talk housing market, that is single family homes. As I share in the video later today with Jason Pritchard, I believe 90% of the real estate market that uses commercial financing is going to feel pain. I believe the single family housing market, owner occupied, is the only part of the real estate market that will function and do well. Said another way, Danielle DiMartino Booth in a tweet said, what bank or lender is going to loosen requirements? And I replied, Fannie Mae, Freddie Mac, and Veteran Affairs, VA. These folks are going to help first-time homebuyers. They are going to loosen standards. That is my opinion. So again, my opinion about the housing market hasn't changed. We are going to be bouncing around 4 million transactions. Price December 22 to December 23 are basically flat. Liquidity crisis does not mean housing crash. Single families are not going to crash, in my opinion. So hopefully that is clear. What do you think? So I have a question. There is a lot of people. One of the things you will see with Dan Bird, actually I think the video is live already. I think I made it live at 7 a.m. Dan Bird, our stock investor, believes that the Fed will cut rates by July 31st. So I want to ask you a question. Do you think the Fed cuts by July 31st, by December 31st this year, or sometime next year? I want to hear from you. Leave a comment below. Do you think they cut by July? Leave below. By December? Leave below. Or next year? Just so full disclosure, Dan says by July, I say 2024, but I want to hear from you. What do you think the Fed does? Leave below. When will they cut? Something else you will see is we must watch the 3,800 level on the S&P. I was shocked yesterday when I recorded it. It's again now live. Dan Bird is saying we could be on the cusp of a monumental event. If you've watched our discussions every Sunday, you know that he's generally bullish. He is telling you clearly, if we break below 3,800, watch out below. He might say the secular bull is dead. that should concern you if you are thinking we are going higher. This guy has been bullish for the full year we've doing it. Watch his playlist. I think it's just called Dan or Dan Bird. Hey guys, what are you doing? Oh, hey. Yes, folks, I'm outside walking the dog, so that's who's barking behind me. That was Sunny, in case you want to know. Peter Schiff is out on the wires saying, hey, inflation's going crazy, money printer go burr, all of these things. And of course, if you know Peter Schiff, he wants you to buy gold, the yellow rock. Now, yellow rock should be probably a part of most people's portfolio. It is an insurance. I certainly have chosen silver as my insurance hedge, but gold is just as good. But again, this is kind of like, it's just odd to me, right? If you want to push the idea that inflation is coming and inflation will get out of control, do you want to buy a yellow rock? Or do you want to buy cash flow real estate with 30-year fixed rate debt and let inflation make your debt worthless? I don't know why people hear Peter Schiff, people believe Peter Schiff, and they don't connect the dots. If you believe, and I don't believe what Peter Schiff is pitching, but many people do. If you believe inflation is about to go to the moon and we are about to have hyperinflation, you should be buying real estate with 30-year fixed rate debt and let inflation eat the debt away. Because why? You win two ways. If inflation takes off and goes to the moon, your asset is worth more and rent goes up, your cash flow goes up. So I always find it really odd that people want to tell me Peter Schiff is right, inflation is coming, we're never going to beat it. And I'm like, well, if you believe that, why aren't you buying real estate today? This is my same feedback for George Gammon when he's pushing this idea of 10% inflation. If you really believe that, George, go buy some real estate. Can't make this stuff up. I don't know if you've heard this, but it looks like small and mid-sized banks are asking the FDIC to insure all deposits for the next 2 years. Yes, folks, as expected. The small and medium-sized banks are seeing deposits leave in droves. If enough deposits leave, all these banks have a liquidity crisis. It could be a problem. Something to say about the banking sector over the next 6 to 12 months is you can expect more regulation, more costs, less transactions, and more bad debt. This is going to be a tough year for anybody in the banking industry and maybe a tough couple of years. At the end of the day, let's talk about mortgage rates. I want to hear from you again. I have a call that mortgage rates will be sub 6 by April 15th. This is, of course, owner-occupied, best credit, 20% down. This will be reported on Mortgage News Daily, I believe is the channel. What do you think? Do you think the 30-year mortgage rate will be under 6 by April 15th? Or do you think I am crazy? Leave comments below. At the end of the day, folks, do yourself a favor. If you want to build generational wealth and real estate is not your thing, you are more of an entrepreneur like Cody Sanchez, please check her out. Go to Cody Sanchez. Let her know you came from one rental at a time. I would love to interview Cody Sanchez someday. All right, folks, take care. Bye.